Our market monitor tonight likes dividend-paying stocks of the sort we were just discussing. He's got names of companies that he says always put shareholders first. Last time he was on, about 2 years ago, he recommended Intel, up 1%, Verizon, up 5%, and Royal Dutch Shell, which, with oil prices down, is 37% lower. He's Ed Perks, portfolio manager for Franklin Templeton's $79 billion Franklin Income Fund. Why don't we begin, Ed, with that stock, Royal Dutch Shell, which is down so much, but is still on your buy list now. Why are you doubling down on it?
Yeah, I think we've actually been given a nice opportunity to add to our position at lower prices, and certainly a lot of that was driven by the decline in oil prices from that date you mentioned, September 2014. Now, what we like about Shell is that they really have a lot of opportunities internally to reduce costs, to reduce capital investment, ultimately to focus on improving the balance sheet and improving returns from their existing projects. So we think really over a longer term period with a more normalized oil price environment that the returns are quite attractive there.
Let's go to your other picks. Microsoft is at the top of the list.
Yeah, you know, I think it's interesting that dividends are an opportunity across a broad segment of the market today. And it's not just about utilities and telecom and the more traditional yield-oriented sectors. And, you know, with Microsoft recently, I think investors have had a nice opportunity to buy it below its highs. Now, this is a market environment where we've been very close to all-time highs. Yet when you look at individual stocks like Microsoft, you've had moments of opportunity to do that. It's a company that has a fabulous balance sheet and I think has an opportunity, particularly in the commercial cloud area, to really drive growth and free cash flow.
A stock that yields 2.5% compared with about 1.5% for the 10-year. You could argue that Microsoft has got a better balance sheet than the U.S. government. Your third pick is Pfizer. Not that I'm making that case. Yeah, your third pick is Pfizer, also a plump dividend yield of about 3.5%, 3.4%.
Yeah, you know, there I think, once again, it's a company-specific catalyst that the management team is very focused on trying to drive shareholder value over time. They're doing that by thinking about strategic options with their business, but also ultimately it's a business that we think over the next several years can generate just a substantial amount of free cash flow with, once again, a very strong balance sheet and an opportunity to kind of deploy that free cash in a balanced manner. It will be through dividends for shareholders. It will be through modest share buybacks and ultimately even some M&A opportunities.
Ed, thank you very much for your time tonight. Ed Perks is with Franklin Income Fund.